I want to talk about something today, everybody, that is important because it's coming up here in the next couple of weeks. Depending on when you're watching this, it may have already kicked in for you. And what it is the end of the pause on student loan repayments. There's some data out there that's saying that the average person will have $300 stripped out of their budget of what hasn't been having to be paid, which are those student loans. So based on that information, there's a flood of mailers, calls, texts probably coming into you right now. It's coming into you from a side of the public sector for student loan refinancing through public entities. Why this is important is because if you haven't bought a home yet and weren't one of those who bought when payments were on pause and you saved up a bunch of money and now rates are higher, home prices continue to go up, you're thinking maybe, like, how will I afford being able to buy a house? So you rush out to refinance with the private student loan companies. This is likely a mistake, and I'm going to tell you why. Because the mistake is that what will end up happening to you is you will strip away certain benefits you have afforded to you while those student loans are still under the federal student loan programs. Things like income-driven repayment programs, forbearance, deferment, the SAVE program. These are all important things. If you run out and you have $100,000 of student loan debt because you're a physician, or $200,000 of student loan debt, and you run out and get into a private program, you will likely lose out on your ability for that student loan to be forgiven into the future. And what happens when in the future you're still paying on this private student loan with a lower payment, whereas if you work for a nonprofit, 10 years in, forgiven. If you stay in the federal program and just make your payments, even if you don't qualify from the private student loan forgiveness, forgiven. So keep this in mind. If you're an educator, if you're a lawyer, if you are just a hardworking professional who went to school and had to accumulate debt, this doesn't have to derail your ability to save to buy a house. Look at staying in the income-based program through your federal student loan. This is something you really want to think about because being able to save more money to buy a house gets you further ahead. If you think about the cost of housing in Colorado, for example, over 4 decades of time, it's 4.5% increase in home prices year over year. And yes, that includes the fall of the home prices during the housing crisis. You got to look at 20 and 21. Home prices went up way more than 4.5%. So be very careful with private loan consolidation. I'm going to tell you right now. There's also a blog on the website. Check it out for more information. If you have any questions, put a comment below. Make sure to smash subscribe. We're going to have a lot of value-driven stuff at helping you build wealth through real estate in a lot of different categories coming up in the coming months.